Good afternoon, everybody. My name's Esther Carder. I'm a partner at Moore Kingston Smith, and I'm a partner in one of our specialist offices where we specialise in advising all agencies really right across the sort of the marketing services sector, as well as sort of other media agencies as well. And we've been a partner of the PRCA for quite a few years now. We've run a couple of these seminars before. I think it's the third webinar that we've done for them during these tough COVID times. So what we've done is we've brought together a panel of experts who can answer sort of specific questions that you have. I won't read all the names out because we've helpfully got a screen with everyone's names and roles on there. But basically what we're going to do is over the next sort of hour and a half, is I'm going to sort of ask the panelists a lot of questions, sort of the typical questions that we're getting asked by our clients and our contacts, sort of frequently asked questions. But please do use the chat function, which is down the bottom of the screen, to ask any specific questions that you have as well that relate to your business, and I can weave those into the questions to the panel. So I think you know, furloughing is still pretty much top of many people's agendas, although we are starting to move a little bit away now, I think, from the period of having to go into that sort of short-term crisis management towards thinking a little bit more about the long term and the future, and thinking about how our businesses are going to thrive as we come out of this. But obviously we still are in this period where we can use furloughing. We did a COVID survey recently amongst our marketing services clients, and actually 85% of clients and contacts had either already used the furlough scheme or were planning on using the furlough scheme. So it really, you know, is turning out to be a very beneficial, widely used scheme. And there was around a 50-50 split in terms of those who were just using the sort of the government grant element, and those who are going to top their employees up to their full salary. So first of all, I'm going to bring Adam in. Adam Flight's our head of payroll, and he's got lots of first-hand experience of actually making these furlough claims, which I suspect some of you will have already tried to do, and perhaps with varying degrees of success. So Adam, are you there? Should we turn the slide, the cover slide off now, Kyrie, and have it on speaker so we can all see Adam while he's speaking. So Adam, I mean, generally speaking, you know, what has your experience of making these claims been? Because you've made a few now, haven't you?
Yeah, so we've made in excess of 80 claims on behalf of our clients, claiming back just over £1.2 million in the last couple of weeks since the scheme went live. And it is a relatively simple and straightforward process to follow, as long as you've got all of the information to hand before you might start the claim. Originally, when the portal went live, if you had about 10 minutes of inactivity, the portal would kick you out. You'd have to log back in and then re-enter all of the information again. But the portal was updated at the end of last week, so you can actually save your progress partway through a claim, so you can log out and then log back in, and it saves at the last point that you entered the information in. There was a stat that came out within the first sort of 48 hours saying that within the first 4 hours of the portal going live, 185,000 employers had made claims totaling £1.5 billion for 1.3 million employees in total. So that was just within the first 4 hours, and there have been sort of further updates since then. But just goes to show you sort of how popular the scheme has been and how many employers are using it to cover the wages for their staff.
Yeah, absolutely. So what information do you need to make sure you've got to hand then before you sort of make your cup of tea and sit down and do your claim?
Yes, so the first thing to make sure you've got is your corporation tax reference number. If you don't have one of those, then you're likely to be registered for self-assessment. So if you've got your UTR number, it'll ask you for that instead. Make sure you've got your bank account details, so your sort code and account number, and it needs to be a UK bank account. It will ask you whether it's a business bank account or a personal one, so directors can pay into their own bank account. It doesn't have to be just a purely business registered one. You also need the bank account billing address. So similarly to when you buy anything online, it says what address is associated with the account. There was a bit of confusion at the beginning as to whether you're actually putting in the address associated with the sort code of the bank account, but that was further clarified to say it's actually the billing address associated with the account. And then you need to know the number of employees that you've furloughed, the name, national insurance number of each employee that you're claiming the furlough for, the start dates of the claim. So if you've got employees that have gone on furlough at various times, then it's the employee that went on furlough first. He's put it as the earliest furlough start date, and then when you're claiming up to. So when we made our first claim, a lot of our clients were processing claims from the 23rd of March through to the 30th of April and doing a claim for sort of that period. It doesn't have to just go and follow your payroll pay periods. And then dependent on whether you're claiming for under or over 100 employees. If you're claiming for under 100, you'll need 3 separate figures. The first is the total furlough amount being claimed, then the employer's NI, and then the employer's pension to be claimed. If you're claiming for more than 100, then you're able to upload via an Excel spreadsheet. But what it'll ask for in that instance is just the employee name, the NI number, and the total claim per employee. So you combine the furlough, the employer's NI, and the pension together. So it's a relatively simple and straightforward spreadsheet to use, and it's only asking for 3 columns worth of data.
Yeah, and can you make more than one month's claim together, or do you have to do is it separate claims? And also people are asking, can you do advance claims? So could I claim now for the money that I'm going to pay in May, so that I've got that money in the bank account before the May payroll comes around?
Yeah, so you can combine the claims. So you can claim for March and April and at the moment part of May. The earliest you can make a claim for is 14 days sort of in advance. So if you're looking to make a claim for May, we'd suggest making it no earlier than around about sort of the 18th, 19th of the month. But if you're paying towards the end of May, even making the claim on the 18th or 19th, it should allow you to process the claim and hopefully receive the money in time before you actually pay out sort of in May. You don't need to sort of put in separate claims for separate months. You can combine everything together.
Okay, that's great. And I mean, generally speaking, how long is it taking people to get the money through once they've processed the claim?
So HMRC have said up to 6 working days, but we're finding the average is probably about 4 to 5 working days. I think when the portal went live, considering the sheer volume of claims being made, considering that it was a miracle the portal didn't crash within the first sort of morning or afternoon, we had clients that had received money, I think, by close of business on Thursday and early Friday. So I think things are speeding up. And HMRC, for some of the larger claims, are actually contacting employers to verify the information they're providing before then approving the claims to be paid.
Thank you. And we've had a couple of questions around what happens if people are receiving pay rises. So let's say they've received a pay rise in April. Which salary would we use to make the claim?
So it's the reference salary that HMRC have been stating from pretty much sort of day one, which is the reference salary as of the 28th of February, if they're a regular sort of salaried monthly employee with no variation. If they're an hourly paid employee or have variations in overtime, commissions or bonuses, which are contractual, then you either look back to the same month last year. So if you were paying furlough in April and looking to calculate that, you'd look back to April 2019, first of all, and see what the employee was paid. And you then work out the average over the last tax year. And then whichever is the higher of the two, you use that as the reference. So the only time where salary increases and things come into effect is if any employers are topping up the pay to 100% pay, in which case you're basing the furlough on that 28th of February pay or the average or the higher of the month last year, and then topping it up to the new salary. Similarly with people on national minimum wage, if they're furloughed, they're not working, and because there wouldn't be any breach of working time regs because they're not being paid for the hours worked, any national minimum wage increases wouldn't actually come into effect until their first day back at work, whether that be sometime in sort of May or June. So the furlough pay is always based on the reference period that HMRC have guided on.
Okay. And what about employer pension contributions and also employers and IC? Where do people stand with being able to claim the cost of that?
Yeah, so pension contributions first. You can claim up to the 3% of qualifying earnings based on a standard auto-enrolment pension scheme. So if you pay 5% or any more than that, unfortunately, it is capped at the 3%.
Right.
If you pay salary sacrifice schemes, then typically those will have to be sort of honoured at the contractual rates previously sort of agreed. With employers NI, the one thing that we have found that where some employers were actually putting in the claim before their payroll was being run is just be mindful of the employment allowance. So that if you are making a claim for employment allowance and that's already been accounted for sort of in your April and possibly May payroll, make sure you're then not trying to claim employers NI as well. And effectively you're then sort of double benefiting sort of from that. So we had about half a dozen clients that we had to rerun the payrolls for to remove the employment allowance element in order so that the claim that had been made by the employer actually matched what was going through the payroll. There were some that when we double checked once the employment allowance had been processed, we were having to remove that from the claim before we were actually processing the claim itself.
Okay, great. And there is, I think some people have been a little bit confused by this announcement of this additional March date from which employees have to be employed by. And I think some people think that has opened it up to a lot more employees, but actually it probably hasn't, has it, for this industry that tends to pay people on a monthly basis?
No, that's right. So originally it was you had to be employed as of the 28th of February, and that was then extended to the 19th of March. But what that actually means is that it's the RTI submission that's made through your payroll, either by your payroll provider or your payroll software, needed to have reached HMRC by the 19th of March. So your typical standard monthly payroll, it wouldn't have made any changes to those because it would have been those that had been submitted sort of in early March for the February pay. The ones that it may have opened up to may have been mid-month to mid-month payroll. So if you paid from the 15th of one month to the 14th of the other, and you closed off your payroll and submitted between the 15th and the 19th, then any employees that may have started on the 2nd of March, 6th of March, or whatever, would then have been included, as well as then any weekly payrolls as well. So weekly payrolls, it would have given them an extra nearly sort of 3 weeks to potentially add new starters of people that can be furloughed. But generally speaking, whilst there was a lot of confusion, it wouldn't have opened things up to a lot more sort of employees than they were sort of actually publicising.
That's great. Thank you very much, Adam. Tim, I think I'll bring you in now. Microphone, make sure you switch your microphone on. So there's been a lot in the press recently about extending, because we're up to the end of June at the minute with the furlough, aren't we? There's been a lot of talk about extending that. Where do we stand at the current time?
Yeah, I mean, let's just do a very brief bit of history. So when it was first announced middle of March, backdated to the 1st of March, running till the end of May. We then had the extension announced in mid-April, extending it till the end of June. And my own prediction was it was going to be drip-fed out after that, because each extension had to be announced with a 45-day lead time on it, because if this scheme's not going to be extended, then larger employers need 45 days in order to work through a consultation period for redundancy. So what we've had over the weekend, with the excitement of our Prime Minister's announcement yesterday, to be followed up with another announcement at 7 o'clock this evening from him, is the Telegraph in particular being leaked a story that the furlough scheme will continuing on until the end of September. And so far, although it's only coming out in the press, it does feel credible what they're saying, and it's being repeated by a number of other publications. So coming on to the end of September, which is going to be 3 months from the existing expiry date. The actual furlough percentage at the moment, the grant that's paid is the lower of 80% of salary, or £2,500. That's now being talked about being 60%, or the lower of 60% of salary. Now, there's no indication yet what's going to happen to the £2,500, but if the £2,500 is reduced in the same way that the 80 is being reduced to 60, what would have is a scheme that's going to pay the lower of 60% of salary, or £1,875. So here we've got something where employees who might be content to be furloughed at home on £2,500 a month are going to be a lot less content to be furloughed at home on £1,875. Now, the added bit in the scheme, and this is addressing, I think, one of the big failings of the scheme, is that it actually encourages employers to send their employees home and do nothing. So what's being talked about, the third leaked announcement, is that if you bring your employees back to work in the business part-time, for the days in the week that they're not working, the government will top up their salary there. So that's almost like partially furloughing somebody. And that's a much more useful scheme. There's a wonderful phrase, I wish I'd coined it, that the Times had in one of their articles, saying, furlough is the heroin of business. And really, we've got to get business off the heroin of business, the furlough scheme. And having the ability to partially furlough somebody is going to help wean businesses off relying on this grant and bringing people back in.
Yeah, I think that if they do bring that in, that's going to be a really useful mechanism that hopefully could avoid some longer term redundancies.
Yeah.
One of the questions that we often get asked is around directors and whether they can be furloughed. And I know there was a huge
I'm not sure if anybody, Esther, I've lost your audio. Somebody else with their mic.
Directors being furloughed. There was a lot of confusion in the beginning, but we're pretty clear now on where we stand with directors being able to be furloughed.
Yeah, the confusion came because all of the guidance, even now, still talks about employees, although there's separate sections about directors, but everything was about employees, and directors are not employees. So yes, a director is now able to be furloughed. We've got concerns around directors being furloughed. If you're one of 4 or 5 directors and you can effectively down tools, go home and do nothing, and your remaining directors can carry on and run the business, that's fine. If you're a sole director and you're furloughed, or you furlough yourself, then the business simply can't be operated, because one of the conditions of being furloughed is that you do nothing. And if you're doing nothing, that means you can't even authorize the payroll or respond to client queries. So furloughing sole director companies, I think, is still difficult, but there's no barrier to furloughing directors, provided they can meet all the other conditions.
But a lot of directors are probably going to be taking a combination of salary and dividends, aren't they? So it might not necessarily be of great use.
Yeah, I mean, directors who are on, the most tax efficient salary, something below £10,000, and taking everything else out as dividend because they happen to be shareholder as well, fall between the gaps between the furlough scheme and the self-employed income support scheme. The government have repeatedly said, look, it's too difficult to look at dividends as part of their income, because when we see their tax returns, the only place we get to hear about their dividends, we can't distinguish between dividends that come from their own company and dividends they might get from elsewhere. And they've just dug in at that point, despite extensive lobbying from many trade bodies, from the mayor's office, from different sources. They haven't really shifted on that and have put it on the too difficult pile. I think that's really unhelpful, and given that the existing self-employed income support scheme is still ending at the end of May, I mean, we've got a couple of weeks of it left to go, maybe we should read into the fact that they haven't yet announced an extension of the self-employed income support scheme, that the whole thing might be re-engineered to deal with directors and their dividends.
I mean, at the minute, as things currently stand, okay, they might bring in this part furloughing scheme, but as it stands at the minute, we're very limited on what people can do whilst they're on furlough, and we do need to be careful, don't we, in terms of sort of future HMRC audits around this.
Yes, I mean, the forecast cost of the furloughing scheme when it was first dreamt up was £10 billion a month. Now, as it happens at the moment, the figure that's being talked about is £16 billion a month. So this is going to cost the Treasury a whole lot of money, and they're going to have to claw it back somehow. And after normality has resumed, you would expect the government to go in and check these claims. I mean, they're already, Adam and I were exchanging emails this morning, a number of our colleagues had telephone calls over the weekend from the Revenue to check furlough claims. People are getting calls at 7 or 8 o'clock in the evening. So the government are already trying to make sure they don't pay out claims which are not rightly due. They will come in later on and check that the conditions, particularly that employees who are furloughed have done nothing, that condition has been met. And as we've said many times before, it's very difficult to prove a negative. So if the government, if the revenue come in under the auspices of an HMRC employer compliance visit and say, please show us evidence that your employees didn't do anything, well, at the very least, they're going to expect the signed statement from the employees agreeing not to do anything. But how else do you prove it? And very few of our clients have actually gone to the lengths of cutting off the email system because they've wanted to be able to stay in touch with their employees, even though their employees wouldn't be providing a service. So it's going to be a very difficult thing to prove later. Added to that, hasn't been talked about for a while, they are going to launch a whistleblower hotline where employees who've been furloughed but are asked to do work can ring up the revenue and tell tales on their employer. And that, employees who are furloughed and subsequently made redundant, who might not feel that well disposed towards their employer, might maliciously or otherwise ring up the whistleblowing hotline and bring upon their employer a PAYE compliance visit. So I think keep being as squeaky clean on this as possible. We had a query after one of these webinars about a team that had been furloughed at very short notice and hadn't managed to complete their timesheets, which were needed to be able to bill your client. And the question was, could they complete their timesheet whilst on furlough? Well, on a strict reading of the rules, no. The completion of the timesheet is a service provided to their employer. And although that feels overly harsh, and we hate to do that sort of advice that's really, the letter of the law, there is a lot at stake at getting this wrong. So really err on the side of caution.
Laura, Don, you read my mind there. I was just about to ask or make the point that employees, they can do training though, can't they, whilst on furlough, because that isn't a service to their employer.
Yeah, of course. So the training, there are some issues around national minimum wage, that if employees are being trained and they have to be paid the national minimum wage, that might be more of an issue if the furlough grant drops down to 60%. But yes, they can be trained. We've done a little bit of lobbying towards government, not with any great success, to say that the apprenticeship levy, which has been paid by many employers but not used, should be unleashed so that employers can use their levy payments to fund training outside of a qualifying apprenticeship. But that yet hasn't gathered ground, but we know parts of government are quite sympathetic to that.
And whilst people can't do anything whilst they're on furlough, we can bring them in and out of furlough, can't we?
Yes, I mean, before the detail of the rules was announced, there was lots of talk of flip-flopping people. So if you wanted somebody in the business Monday, Tuesday, Wednesday and furloughed Thursday, Friday, that looked to be possible at the outset. When the detail of the rules came out, it said, look, in order for this to be a furlough which qualifies for the grant, the minimum period of the furlough must be 21 days or 3 weeks. So we can't do our furlough Monday, Tuesday, Wednesday, bring them back in Thursday, Friday, but we can have consecutive periods of being furloughed. So if you've got a team that's particularly creative and thinking, not of course providing a service to their employer, but thinking whilst they're on furlough, furloughing them for 3 weeks, bringing them all back in for 1 week to see what their minds have cooked up, and then potentially furloughing them again is absolutely possible. And now we know the furlough scheme, or now we believe the furlough scheme is likely to be extended to the end of September. Having some sort of flip-flop policy or rotation policy might make sense just to keep the sanity of your employees. If we know we've got another 4 months of this, you might want to bring the currently furloughed employees back and send a different batch off, just so that people don't stay isolated away from the business for too long.
Yeah. Now, a lot of agencies in this industry might have things like employee management incentive schemes in place, or EMI schemes in place, share options. There is an issue there, isn't there, if we furlough somebody who has one of these options?
Yeah, I mean, really frustrating the government haven't done the most simple thing they could do of just announcing a concession on this, because it is a real problem. If somebody has been granted an EMI option by their employer, knowing that when they exercise that EMI option, possibly on sale of the agency later, that they're expecting a very beneficial and efficient tax structure when they exercise that option and sell their shares, because the EMI rules are pretty good. However, if you furlough an employee, the employee ceases to meet the full-time working requirement, because as a condition of being furloughed, they can do no work, which causes the option to become non-qualifying. So rather than having this lovely tax-efficient environment when it's exercised, you actually exercise the option in a completely tax disastrous environment, with tax being paid all round by the employer and the employee. So as it's not been announced so far, I wouldn't be at all surprised if it's not going to be announced now. So we'll apply common sense, assume that that was never what the legislation intended, and carry on and pretend our EMIs are fully qualifying. But when whoever does the due diligence on your agency, whoever's buying it, this will be a really big issue.
Yeah, absolutely. I mean, one of the other things we're saying to clients as well is if you've got an existing EMI scheme in place, you know, perhaps now is time to have a look at the value at which you granted those options at, because the value of the agency may well have fallen. And particularly if you've got performance criteria as well in there, you know, the performance criteria you currently have might seem a little bit challenging, given that we're, you know, going to be coming out of this into a very difficult economic environment. So EMI schemes generally are certainly worth a revisit.
Yeah.
Amy, I think bring you in now. Hi, Amy. So, you know, some people are asking, okay, we've got people on furlough, making furlough claims. What if there's people that we haven't already furloughed? Is it too late? Can we put new people into furlough?
Yeah, you can. So the minimum period is 3 weeks. So as long as you have that amount of time. So at the moment, obviously the end date is currently sitting at the end of June. So the last time you could furlough someone is the 10th of June at the moment. But obviously, as Tim says, it's looking likely to be extended. But yeah, as long as you can do that 3 week period, you can start people on furlough anytime between now and the 10th.
Yeah. And what about if we eventually go on to make people redundant for who we've claimed furlough grants? Is there any clawback of the grant, or
no, not as far as we know? No.
Yeah. And what about, I think, holiday entitlements? The rules have changed there, haven't they, in terms of what we can and can't do with furloughed employees and their holidays?
Yeah, I think obviously the furlough period happened over 3 bank holidays, and so they had to put something in place. But yeah, so you can now claim for holidays. So you would claim the 80% as usual, and then you would top it up to 100%. So if someone's on holiday, they have to be paid their full pay. The bank holiday is slightly different. If they usually work a bank holiday, then you don't do anything. You just carry on as normal and still claim for it, and you don't pay it back. Or you don't top it up, sorry. If you don't usually work a bank holiday, then the choice is either to claim for it, top it up to 100%, or you claim for it, don't top it up, and they get it back in lieu. So it depends on whether or not they're supposed to work it.
Yeah, great. And obviously we touched before on the fact that, you know, people on furlough can't provide any services to their employer. They can, however, do training. What else can they do? Are there other things that we can be encouraging them to do to keep them occupied?
Social things. So you can still communicate with your employees, and I think that's really important, especially the longer this goes on. Obviously, well-being is quite a key thing in this scenario. So you might have people that are living alone, that actually they're quite isolated, and having some communication from work, just social, could go a long way. Also, if you've got part of the business furloughed and part of it not, you don't want those that are furloughed to feel out of the loop or to not be included in any kind of company update or anything like that. So you can absolutely communicate with them, as long as it's voluntary, that they obviously read the communication. They can't be forced to, and they can't be expected to respond, and it can't be anything where they would be providing a service to the agency.
What about paid?
Just social.
Yeah. What about paid work for other people?
Paid work for other people? Oh, for other companies, yes. So, so they can work for other employers. They can volunteer. They can't do any voluntary work for the company they're furloughed from, obviously, or any company that's part of the same group. But yes, so they can work for another employer. It sounds a bit strange, because essentially they could go get another job and have 2 salaries paid to them. But at the moment, there's nothing saying that they can't do that. So the only thing to look out for is their contract, something in their contract that says they can't work for anyone else.
Yeah, okay. So we sort of touched on redundancies in this sort of COVID survey that we did in the middle of April. About a third of respondents thought that they might need to make redundancies, and a further third were as yet unsure. And obviously agencies do not need to start thinking about what the new normal is going to look like, and what their resource requirements and their skill set requirements are going to be. I mean, obviously at the minute furlough runs to the end of June. It looks like it's going to be extended, albeit on a reduced scale, to the end of September. But what are what do agencies need to start thinking about now if they think they are going to have to make redundancies longer term, and what sort of are the key dates they need to start thinking about to put that planning in place?
Yeah, I mean, if you've got less than 20 people that might be affected, you can do the consultation period for redundancies fairly quickly. So we say around about 2 weeks, but you can do it shorter as long as you can demonstrate that you've considered everything. If you've got more than 20 and below 100, you need to consult for 30 days. And if you've got more than 100, you need to consult for 45. So if you've got more than 100 people that you might be looking to make redundant, really you need to start now to be within the furlough period. You can consult with people while they're furloughed because that's not considered work, so you can do that. And although it's not on any guidance publicly at the moment, we've had it confirmed by HMRC that their internal guidance says that you can claim for notice pay, including payment in lieu of notice. So actually, if it's something that you absolutely know you're going to get to, it might be worth your while looking to start it sooner rather than later, because you can use this scheme to make some of those payments. Obviously, paying in lieu, it might not help you because of the cap on the monthly claim that you can make. But yeah, the option is there that if they do extend it, you might be able to claim back for the notice period as well.
So we can put people through a redundancy process whilst they're on furlough, can we? And that isn't going to sort of constitute a service to the employer.
No, you absolutely can. So you still have to consult with them. So all the normal rules apply. But yeah, it wouldn't be considered work, so you can do it on furlough.
Yeah, and some people have asked, does there need to be any correlation between those people who've put on furlough and those that we eventually go on to make redundant? Is there an expectation that the two would sort of somehow tally up?
But there's nothing in the guidance, but I would imagine so. So when it comes to redundancies, it's always the position that's made redundant, not the person. So it has to be that the position is no longer needed. Obviously, those people that are on furlough, it's clear that there is no work for them, and so those positions kind of seem to be the ones that would no longer be needed. But that might not be the case. As long as it's a genuine redundancy, you might have restructured your team, and actually someone that hasn't been furloughed throughout this period that role is no longer required, and then you can start the process. You just have to make sure that if that is the case, you've got your clear business reasons as to why those people have been identified.
I mean, so redundancies is a solution, and also a longer term solution might be implementing salary cuts. And certainly in our survey, about 60% of people either had already implemented salary cuts or were thinking about implementing them, with sort of 20% pay cut being a particularly sort of popular amount. But if agencies are thinking of using this as a longer term solution, how do they go about sort of building that in to employee contracts? And is this something they can impose, or are they going to need to get people's buy-in to this?
It depends what's already in there. So if in their contract of employment they've got a clause that refers to short-time working or anything like that, they could potentially reduce the working week, in which case that would then obviously in turn bring down the salary, and that's fine to do. They can just give reasonable notice. If they don't have that, then they'll need to either consult or get consent. So what we've been seeing over the last couple of months, that actually a lot of employees are quite willing to take a bit of a pay cut at the moment, or to reduce their week. Because everything's so uncertain, they'd much rather have some kind of security about their job. And if that means taking a 20% cut to pay, then, that's what people are doing. Yeah. So getting consent is probably the quickest way to do it. It's a lot nicer as well. Obviously, when you start to consult, it's quite a harsh process. It's very formal, and if you've got quite a small agency, or you've got a really kind of easygoing culture, actually those formalities can be quite harsh, or just not what you're used to. So actually, consent is sometimes the best option, and you'll be quite surprised how many people actually do put their hand up and say, yeah, absolutely fine. And there's no deadline. So you can keep it going for as long as everyone consents for.
Yes, exactly. And potentially with some clawback at the end if the agency turns a good profit at the end of the year. I mean, certainly a lot of my clients that I've spoken to, actually their employees have been very cooperative with regards to entering voluntarily into agreements that they think are going to help the business survive long term, and therefore secure them jobs long term. It makes sense, doesn't it? Thank you very much, Amy. Tim, I'm going to bring you back in now. So obviously we've been talking about sort of employed people. What about self-employed and freelancers? What are they entitled to, and how do they go about claiming that?
Yeah, this has been one of the least popular bits of the government measures announced. So we've got the self-employed income support scheme. This sounds a bit like the furlough scheme in that it covers the period from the 1st of March to the 31st of May. As far as I know, the government have been completely silent on extending this, but it would apply to anybody who put self-employed income on their 2018-19 tax return. So this is income they've earned in their own right, not through a limited company or in any other capacity, so genuine individual self-employed people. If they have that income on their 18-19 tax return, continue to be self-employed in 2019-20, and are either self-employed now or are not self-employed by reasons of the coronavirus crisis, then they can claim the lower of 80% of their trading profits, or £2,500 a month. So sounds very similar to the furloughing scheme. The scheme is unpopular for lots of reasons. One, at the outset, the money was being promised probably into July time, but that sounds an awful lot like it's going to come much sooner now. About a week ago, that was accelerated, so that the money is coming much sooner. However, there are limits. If your trading profits, if your self-employed profits are greater than £50,000 in 2018-19, or on average over the 3 years ending up to that, then you're limited. You can't access this scheme. Similarly, if you had income from self-employment and you also had an employment as well, you may have been chopping and changing between roles, then you must have self-employment income of more than 50% of your total income. So people, through no fault of their own, could find they're not eligible for the scheme. If they started their self-employment after the 5th of April 2019, they're also not eligible for it. So it's a pretty restricted scheme. I think the government did it because there was an outcry from self-employed people. It feels like a little bit of a sticking plaster, and because it's not being extended, go back to my earlier comment, perhaps it's being entirely re-engineered to deal with those people who take dividends from personal service companies. But we've had no detail so far on that. Possibly in Rishi Sunak's speech tomorrow, we'll hear a bit more about what's happening for this one.
And that would cover partners in an LLP, would it? Because there are a few PR agencies structured that way.
Yeah, if partners in an LLP, if they can pass the £50,000 profit share, so their individual profit share from the LLP, not the total LLP profit share, then they will be eligible for this as well. You know, gut feel in the industry, if they've become a partner in the LLP, they're going to be earning more than 50,000. So probably, in theory, they qualify, but possibly have limited application.
Yeah, sure. I mean, one of the other, areas of support has been this sort of, deferral of PAYE and NIC payments, and sort of about 40% of the people in our survey had agreed a postponement with HMRC, typically between sort of 1 and 3 months worth of PAYE. And obviously we've got the VAT deferral as well till next March. I mean, looking, ahead, what sort of support can we expect from HMRC when the payment of these liabilities comes around?
Less, I think, in a word. When the time to pay coronavirus hotline was launched after the budget back in March, incredibly helpful, as it was during the financial crash of the past. The revenue were your first port of call for cheap finance. Defer paying any taxes you can agree with them, and that's what we're seeing now with the coronavirus crisis. 3 months of PAYE became fairly standard to defer doing that, and people who deferred their PAYE, Esther, you'd have seen I copied you in on an email to your client today, who've deferred, but they are behaving in textbook good fashion. They deferred their PAYE, the February, March, and April PAYE due in March, April, and May, what they're doing is well, actually, no, sorry, their March, April, and May PAYE due in April, May, and June. They're getting in well ahead of the June 19th payment date for the last bit of deferment, and getting back in touch with the revenue and saying, look, we need now to agree payment terms for how we're going to bring all of this up to date, not leaving it till the last minute, because you may need a few run-ups with the revenue to agree something that's acceptable. Now, if the deferment you've had already and your payment terms can all be wrapped up within a year, So if you've deferred for 3 months, you might clear the backlog over 9 months. That feels like that's reasonably easy to agree with the revenue, because the authority of the people you're speaking to is to defer payments for up to a year without going to some sort of higher authority to seek approval. But really, depending on the sums involved, your track record with the revenue, the potluck of who you get to speak to at the other end, get in early. It's unlikely that they're going to want it as a single lump sum, but you may find that if you've deferred for 3 months, their starting position is that you repay it over 3 months. If that's not achievable for your business, you need to get on the phone and start to try and negotiate something else. There is possibly, it's probably not that difficult to find, even if you Google it. The ICAEW, the Institute of Chartered Accountants of England and Wales, our institute, have put a really good list of helpful tips on how to deal with the time to pay hotline, the information you should have available in advance, anecdotally what we believe the authority of the people you're speaking to is, so you know where the limits are. If you Google ICAEW time to pay tips, you'll fairly quickly find their hints and tips, a couple of pages of really helpful guidance. So if you are calling the revenue back to agree payment terms for anything you've deferred, do have a read of that first, so you're adequately forewarned of what might be required.
That's great. Thanks, Tim. Shane, I think I'll bring you in now. Obviously, business insurances is your area of expertise. I mean, broadly speaking, is this financial impact on agencies likely to be covered by any insurance policies they hold, like business interruption or anything like that?
Pretty much no. Across the board, that's what we're finding from a lot of our clients.
Yeah.
Insurance just simply isn't designed to cover pandemics, and so the overall cost you would hope, as you're finding out and guiding, is going to be met by assistance and direction from the government. It's just not a great place at the moment.
And what about premises insurance and things like that? Because obviously there are a huge number of London offices laying empty at the moment.
Yeah, and that's really good point, because I think so many people are trying to scratch around for finding ways of getting cover under their own insurance. They're forgetting about the cover that they do actually have. So where you've got people that are working from home because the office is unoccupied, where these people have got to be mindful is, whilst COVID doesn't particularly affect the property, the fact it's unoccupied can bring into play some clauses such as in unoccupancy. So it's really worthwhile getting a nice vague email to your insurance broker just saying, look, we're not working from the premises at the moment. Does this impact our insurance in any way? Is there something I can do to make the whole thing better for myself?
Yeah, I mean, obviously agencies are looking, generally speaking, for cost savings at the minute. So are there any sort of other insurances where they might look to be saving money?
So the main aspect I think that's going to bear the brunt of the insurance cost is probably going to be professional indemnity. And sadly, professional indemnity premiums are based on the previous year's activity. So whilst you will be declaring this year's activity for next year's renewal, that will impact that then, but won't be impacting it now. But if you've got other exposures where you've got turnover for employers' liability, public liability, maybe you hold for some stock for some reason, that's all determined by numbers. So if your numbers have come down, again, ring your broker, have a chat with them, and just say to them, you know, is there any of these numbers we can bring down that can bring down the premium? Insurance companies are being receptive, but they just need to have the conversation and the dialogue.
Okay, great. And then, I mean, cybercrime has kind of gone through the roof, hasn't it, whilst all of this has been going on? Are there any insurances that businesses can put in place to protect themselves against that?
Yeah, and I think the main thing you need to be mindful of is there's a couple of areas of cyber insurance. So you've got cyber liability, which is your duty of care to look after and protect what you hold. And then there's the other bit, which is the crime insurance. And a lot of people are being sold or are buying cyber liability policies because they're traditionally cheap, but they're missing the bits that they actually need for this. So, I mean, this isn't affected by COVID acting any exclusions, but people do need to check their cyber policy and just make sure that there is actually cover for crime, and just be diligent in staff as well away from home in respect of training. You know, just because you're not operating out of the office, you need to make sure that you're maintaining the same level of diligence, not clicking links, that sort of thing.
And Shane, we've been asked, I mean, there's been some sort of adverts going around on the radio sort of offering for a one-off fee to sort of do an overview of people's insurance cover, and then if there is a possibility of any claims, to do it on the sort of no-win, no-fee basis. Well, what's your view on that? Is that worth taking up?
really, there's no reason, if you've got a curiosity as to whether you're covered or not, email your broker, just make sure it's in writing and just say to them, have I got cover for this? I think the danger is if people were confident that there was cover that they're going to discover through these insurance policies, you know, like unusual terms and conditions, they wouldn't be asking for a fee to do the work. Because if they were confident, they'd turn around and say, we will do it, no win, no fee. And this is what I predicted when we were doing these a few weeks ago. You know, people aren't offering the no fee up front because they know that most insurance policies just will not stretch to cover it. So I think you just need to be really, really wary of it. You know, if it's £100 or a couple of £100 and you can afford to lose that, it's probably not the end of the world, but just maybe have a look for experiences of that particular company and just say, you know, what are you looking for? I mean, you can read your own insurance policy and have a look under things like pandemics and disease cover. And if there's nothing in there, then there's not really a lot to look for. What worries me is people throwing money that they really need at the moment at people that are just in this to seek an opportunity.
Yeah, so I think that the message there is just ring your broker up yourself and have the conversation, and they should be able to give you the answer, shouldn't they?
100%, and I'd actually do that by email as well as a follow-up, especially when you're asking them about potential pitfalls in your own insurance. That way, if they do turn around at a later date and say, oh, no, you're not covered for that, you know, you've got everything. It's really important to get it in writing, email.
That's great. Thanks, Shane. Thank you very much.
My pleasure.
Paul, just sort of moving on to you. So just a couple of stats from our COVID survey, not that I'm plugging it. So about half of the respondents had enough cash in the bank to last them more than 6 months, which was quite pleasing, I suppose. But more worryingly, about a quarter only had enough to last them up to 3 months. And obviously this takes into account the sort of the reduced costs that they've had post-COVID and sort of slashing all non-essential costs across the business. And actually, when we asked the question about how many people had applied for one of these government CBILS loans, only about a quarter had actually applied, and by and large they were going to be asking, or the majority of those were going to be asking for up to £250,000. But I think, you know, as we move out of this crisis phase and more into thinking about long-term planning for the future and success, you know, we haven't lost the opportunity to still apply for these loans if we think we need them. So Paul, can you just tell us a bit about the current situation with these loans, and, you know, how readily are they being agreed to? Because I'm still hearing there's an awful lot of pushback and, you know, asking for an awful lot of information.
Yeah, so I think in terms of the media, things have settled down a bit on CBILS, which I think is what the government were looking to do, or what they were hoping would happen with the launch of the bounce back scheme a couple of weeks ago. Yeah. In terms of CBILS, at the end of last week, 5.5 billion of loans had been approved, but that was to about 35,000 businesses, and that was around half those that had applied. I think at the start of this, sort of 3 or 4 weeks ago, I saw that 130,000 businesses had requested information about it. So it still feels slightly light in terms of the percentage of businesses that are actually accessing this scheme. I think if the criticism has died down for the moment, I'm expecting that maybe a further wave, particularly if there are changes to the furlough scheme, or if we sort of get into the end of the initial 3-month period and the requirement for cash to increase. There's still definitely a feeling out there that the process is taking too long. I think partly that is a function of the banks being overwhelmed by the sheer number of applications, but it's partly due to the rules of the scheme. I mentioned the bounce back loan scheme, and so that was launched. That was an alternative launched last week. It was aimed to get support to smaller businesses faster. Whilst it's aimed at smaller businesses, there's no upper upper size limit. So in theory, anybody that ticks the eligibility criteria could apply, but the limit that can actually be borrowed is a maximum of £50,000. For smaller businesses, that limit is also a condition of the turnover. It can't exceed more than 25% of your 2019 turnover. I mentioned it's meant to be a lot faster, and it's done via the online application form with cash received within a few days of applying. Unlike CBILS, there's an interest rate which has been set by the government, so that's been set at 2.5% per annum. The term is similar to CBILS, so that it can be up to a 6-year period. The first year's interest and fees are paid by the government, and there's no capital repayment in that first year, nor are there any early repayment fees. One of the big changes to CBILS is that the loan is 100% backed by the government. So in the media, there has been a lot of pressure from the Chancellor to do the same with CBILS, and I think this was maybe his concession on that point. The key point, though, is that this is still a loan, so it's not a grant. The borrower is still expected to have to repay the money. Eligibility criteria is a bit different to the CBILS scheme as well. The main clause is that anybody applying has to self-certify that they were not a business in difficulty as at the 31st of December 2019. Whereas for the CBILS scheme, you had to prove that, but then you also had to be able to prove that you were able to support the amount of debt you were applying for.
If you have applied for, I would say, generally speaking, what sort of level of financial information do agencies need to provide in order to access these loans, and what is it different between the two of them?
Yeah. So on the bounce back loan scheme, you don't necessarily have to supply the information depending on the bank. Some of it you can self-certify, but it's still a good idea to have you still need to have the information available to be able to prove that your turnover is to prove what your turnover is, and then secondly, there's a series of questions which enable you to self-certify to be able to justify that you weren't a business in difficulty. So again, part of that will be related to your balance sheet. So again, you would need to have that information available.
Great. And Paul, a question comes through around the level of support that's available to sort of new startup businesses that are less than a year old and therefore don't have any historic financial information.
That is a tricky area. Part of that will depend. There is a further scheme available, which is the Future Fund. That's available to businesses that have had 250,000 of third-party investment. This scheme would not be, if this scheme is very much tied to your 2019 turnover. So if for instance you set up in September 2019 and you've got 3 months of turnover, then unfortunately that would be the limit. Then that would be the test that this is applied to.
So maybe it's going for one of these sort of the startup loans, and actually for businesses that haven't started up at all, there's talk about the government's having a startup fund for investment in new businesses going forward, isn't there?
Yeah, absolutely.
Yeah, I mean, I think these loan schemes are very, very beneficial with the long repayment terms and the low interest. But a lot of my clients are quite wary of accumulating a lot of debt, even though it might help them in the short term. At some point, they still have got to pay it back. So, I mean, what sort of things do agencies need to think about in that respect?
I think the way that agencies should be approaching this is that they should be looking at the whole picture. The loan schemes in particular, they are absolutely not the silver bullet which solves all the problems. The furlough schemes, the tax time to pay schemes, they're far more advantageous to businesses than this, where you are obviously on the if you are delaying the payments to HMRC, then that's still a debt you need to repay.
Yeah.
But if you're taking on loans, then this is adding additional debt to your business. So what we're advising clients is you need to be looking at your cash flows and projections very carefully. A good tool to be able to do a good tool that we're advising that businesses of all sizes produce is a 13-week rolling cash flow, which you update on a daily basis, ideally, when you wait, so you can project what your cash requirement could be, and you flex it for some receipts from clients, from changes to the furlough scheme, to what would happen if you do take on debt, and then also if you do to come to the conclusion that a loan is what you need, then you need to be considering what that looks like in terms of your drawings and profitability into the future. Clearly, you will have 6 years to repay it, but if that then means that when the repayments do start in 12 months' time, what will that look like in terms of how much money will you be able to extract from your business? If that is going to really hamper you in terms of the amount of cash left in the business in 12 months' time, then again it may be best not to take on one of these loans. And the fact that they're underwritten by the government, it doesn't change the fact that you are liable for the debt, or your business is liable for the debt.
Yeah, absolutely. Questions just come in, Paul. So it says, with regards to bounce back loans, only a couple of banks are accredited at the moment. Do you have any more insights about other banks that might be getting the accreditation? I think the same thing happened with the Stovold loans, didn't it? You know, the list has got longer as we've gone on.
Yeah, so when the Stovold loans first started, there were 40 banks. I think I saw this morning there was I think over 60 now. I thought that my understanding was that there were more than just a couple. The majority of all the major banks can offer these bounce back loans.
I thought there was about 8 to begin with, to be honest. 8 of the major high street banks, I think, on the bounce back at the beginning.
I'm just looking that up now to see how many on the British Business Bank website is generally is a very useful resource, because that provides information about all the various loan schemes.
I mean, with the Stovold loan, I think the message is very much go to your own bank first, and of course it was quite likely that your own bank would be accredited. And is that still the message with Stovold, and is that going to be the same message with the bounce back?
That's my understanding, yes. I have heard the bank where the bank where if you've been refused elsewhere, then the bank which are considering applications best for some alternatives for non-clients is RBS or RBS and NatWest, probably because they've been lent on by the government to be able to do this. I have heard it is very difficult, and if you have turned down, the chance of success elsewhere are quite slim, unfortunately.
Yeah, I think that's right. I mean, Ian, have you got anything to add there from sort of an insolvency perspective on companies taking on this sort of debt? With your microphone switched on.
Hi. I think it's very easy to take on these bounce back loans. I think it's quite simple to be able to certify that you were solvent at the end of 2019 and still actually be insolvent in March. Now, that creates problems in itself, because if you then certify that you're accepting part of the criteria, but you actually haven't thought about whether you can pay back the loan, you haven't put together any cash flows to reasonably consider it. If your business was to get into trouble a few months or even a year or so down the line, as a director, you could be guilty of misfeasance. I think we all know that there's quite a lot of help from government in freezing the wrongful trading provisions, which means that if you take on extra credit in this period, and that's only to the end of May, that hasn't been extended, that would protect you as a director, but it certainly doesn't give you a get out of jail card. I think most regulators would probably look at it as a failure from a misfeasance role, even if it's not a wrongful trading role. So I would say certainly always document your decisions and actually look at, even if it's easy to get this loan, and if at any of the loans, even if it's putting off HMRC, deferring PAYE as well, all those are extra, effectively you're kicking the can down the road. Make sure you've got cash flows there that back up your decisions as a board, so that if worst comes to worst, you've got a defence as to why you took the decisions you took. Remember, as a director, and if you are insolvent, your duty is to creditors and not to the company anymore. So you need to be always thinking about, am I doing this in the best interest of creditors?
And there has been a temporary suspension of the wrongful trading laws, hasn't there? But that's soon to run out. Is there going to be an extension again?
Well, I don't think, to be perfectly honest, it's going to make a lot of difference anyway. I think the suspension of wrongful trading laws was really a perception point of view from the government. I don't think it's going to make a huge amount of difference. I think the government realise this, and they're not going to extend it. They were very keen to point out when they did freeze the wrongful trading provisions that directors had to still be careful that they make decisions that are in the interests of creditors, because liquidators can come after them for a load of other things that they could do wrong. I'm not suggesting that, certainly agencies aren't in a position where they're going to start selling assets cheaply or taking cash out and building a swimming pool in their back garden. But, there are there's lots of scrutiny on directors for acting properly in these times. And just because you've frozen the wrongful trading provisions doesn't really help directors avoid other claims from misfeasance. So I think they need to take advice. They need to be looking at their 13-week cash flow is obviously a very good tool. So they can show that they look like they've got the ability to continue to trade out of this. Because if they don't have that viability, then they shouldn't be taking on any additional debt in this period.
And at what point, I mean, obviously, business owners are going to be concerned about falling foul of these insolvency laws. I mean, at what point should they be picking up the phone and having a conversation with an insolvency practitioner?
Probably last month.
Last month, yes.
Yeah. I think the earlier you can
I guess the point I'm trying to make is that a lot of people leave it too late, don't they?
Yeah,
I think.
Of course they do.
Yeah.
I mean, I'm speaking for myself, but our industry is quite a small industry. I know a lot of the insolvency practitioners. We all give a lot of free advice, so we're very happy to speak on the phone and explain the situation. At least help directors then to mitigate their own personal risk in these circumstances, but also can give quite good advice just over the phone in a sort of 5-10 minute conversation. I mean, even now, on this call, I can easily say to agencies, look, minute your decision-making process, look at a 13-week cash flow, don't take on debt without knowing that you can pay it back. These are very simple things that I think there needs to be evidence of. So directors aren't seen to be just sort of unilaterally taking on debt without worrying about whether they can take it back, because that's pretty negligent.
Yeah, I agree. I think we're going to wrap it up soon. Ian, have you got any other points you wanted to cover on the insolvency angles?
Well, it looks like furlough is going to be going, well, we think furlough will be continuing in some shape or form, but obviously there is going to be a decision to be made by a lot of businesses whether they can afford to take back staff and pay them 40-50% of their wages if there isn't enough income coming through the door. Now, I think most insolvency practitioners are relatively quiet at the moment with all the support around. I think businesses are holding the walls from the door. Whether that will continue, I don't know. So I would say at the moment that companies need to be looking at taking advice and understanding what their medium and long-term futures look like and how they can reasonably affect that going forward. So I would say better to err on the side of caution and go and get the advice now.
Absolutely. Just had a question come in actually. this probably one for you, Amy. So what are the guidelines regarding staff carrying over holiday to next year? Can we encourage them to take holiday during the lockdown? Yes, exactly, to prevent everyone wanting holiday the second we're all able to do more interesting things and sit in our back garden.
Yeah, so you can encourage people to take holiday. So that's definitely one of the things that we're doing internally as well. So you can ask people to take a certain amount of their holiday within a time period, or you might want to actually enforce it. So you could say, you know, we want you to take a week holiday during this date and this date. You just have to give double the amount of notice to the time you want them to take. So if you want them to take 2 weeks, give them 4 weeks notice. If for some reason that they can't take all their holiday, or you can't accommodate all those requests, then the government have announced that they can carry over holiday into the next 2 holiday years. So you don't have to worry about accommodating everything if you genuinely can't, and then employees don't have to worry about losing it. So yeah, that was announced recently.
Super, thank you very much, Amy. So if anyone else has got any more questions, do get typing. I thought it was just worth just including a couple of extra stats from our COVID survey. We haven't really talked about property, but obviously property is probably your second biggest cost after employees. So about 65% of the respondents had said that they had approached their landlords for a conversation around varying the terms or rent payments, with varied success. Of those that had had those conversations, about 30% had successfully managed to agree a 1 to 3 month deferral of their rent. 9% had managed to agree an actual reduction, a long-term reduction for between 1 and 3 months. But about a third hadn't been offered anything at all. And actually, as a consequence, half of those decided that they just weren't going to pay their landlord anything at all, and then there was a big chunk who just hadn't heard anything back from their landlord at all. And other sort of creative solutions, people are finding things like having agreements to have an early exit from their lease, maybe paying on a monthly basis rather than quarterly in advance, and maybe sort of having a 50% reduction or 25% reduction in their rent for the next sort of 3 to 6 months. So a whole variety of solutions being offered by some landlords. But I think, you know, I would strongly encourage anyone who hasn't had a conversation with their landlord as yet to have that conversation and to push hard, because rent, rate, service charge are a big chunk of your overhead costs. In terms of opportunities, actually, you know, the answer to this question was a little more positive than I might have thought. And nearly half of agencies thought that actually the COVID crisis did present some sort of opportunity for their agency. Some thought that actually it would generate higher sales. That was 15%. 10% thought it might give them opportunistic takeover opportunities, and about 30% thought actually it did offer them a chance to rationalise their business. And I think certainly now is the time for businesses to move out of that sort of crisis phase and start thinking about the long term, and maybe start thinking about those difficult decisions that they've been putting off around resource, and sort of reviewing the skill set and the mix of skills that they've got within their business. And also as well, making sure that you really get back to focusing on your business development, winning new clients, trying to identify where the real opportunities are, you know, which sectors are going to do well now, are doing well now and will do well in the future, and make sure that you've done some market segmentation around that. Look at your business development process, and maybe your proposition might need tweaking to make sure that it speaks to those industries that are going to do better than some of the others. I mean, as we will all be telling our clients, or you will be telling your clients, you know, it's critical to get your business development right and your sales messaging right in times of crisis, because it's those that do that that will survive. So we asked also, you know, how concerned businesses were generally about the COVID crisis, and I was really pleased that only 2%, I mean, unfortunate for those 2%, but only 2% thought it would be fatal for their business. And nearly half, whilst they were very concerned, thought that they would make it through the other side. So I think that's a slightly cheerier note to end on, in that, you know, I think, you know, marketing communications businesses are generally, you know, pretty agile businesses. They do all seem to have reacted pretty swiftly to this. And this industry, you know, it always takes a kicking in hard times, but it tends to bounce back. So I'm hoping we're going to be seeing all of our 98% of our clients and contacts on the other side of this, regardless of whether we've got a V-shaped, U-shaped, corrugated bar shape, or as I like to say, a sort of an inverted rainbow-shaped recovery. So I think that's up for all from us. And do have a look at our coronavirus hub on our website, which Kari, maybe you could circulate the link for that, and I'll hand you back to Kari, who I think wants to say a few words about forthcoming PRCA events.
Thanks, guys. That was a great event. Really interesting facts there. So, yeah, we have the International Summit coming up on Wednesday. It's Wednesday, Thursday. It's 2 half days for birthdays. We've got some great speakers lined up. If you want to know any more on that, feel free to email me. I will drop my email in the chat box, or you can just click on the link that's copy and paste the link that's on the slide. And also, we have 50% off training in May as well. So feel free again to email me. Let me know if you're interested in any courses, and then the link's there. And again, thanks to the FD Forum Group. It's a great event, guys. And yeah, thanks for attending.
No problem. Thank you.
Thanks all. Thanks.
Thank you.